Good evening, everybody. We're having a warm fall here. It was almost 80 degrees here in Pittsburgh today, which is unusual for obviously November. All right. So here's what we have to watch out for. Today, the Dow went above the all-time high, which was approximately right in this range, and then sold off on the close, kind of doing a shooting star signal. The unusual thing about today's trading was the market was up 12, 13, 1,400 points, and there was still a lot of stocks trading down. So I haven't figured out yet which ones were taking it up big. Excuse me. But what was more revealing was that the NASDAQ opened up near the top end of the range and then started immediately selling off. Now, it was still up 100 and, no, it was not, down 181 points. So that gave us a pretty good illustration of the, I don't know whether the right word is dichotomy of the investor sentiment, that you had a Dow up huge and you had the NASDAQ gap up and immediately sell off. But the underlying factor was that there was a lot of stocks trading lower today. So that should give us a little bit of that warning, and especially with the NASDAQ doing a left-right combo right here at this resistance level, which this resistance level is also from another level back here. That's not a good sign. Ron, I was having the same problems, but I had a few stocks that before I got down to the desk and I saw the pre-market futures were up huge, I'm thinking this is going to be a palooza. I got down here and my my account was basically flat because there was stuff that was up and stuff that was down. I'm thinking, man, oh man, I should be getting rich today. Keith, yeah, that's what we'll kind of look at here tonight. So lots of movements around everywhere. Crude oil was up pretty strong today, up about 250. It was up 350 at one time. It was back up into the $40 range, trading a little bit lower after hours. Not so much sector rotation, Ron, but sector reaction. So we've had a lot of stocks going up like Peloton and things that were related to being stuck at home and not being able to get out. Now all of a sudden they come up with a very dynamic virus, which means maybe it's coming to an end soon, or at least there's a something that can stop the numbers as far as the number of viruses. So that's obviously changed investor sentiment to things that were not doing well during the shutdown, the things that might be doing well now that that shutdown might be over. Things like airlines, cruise lines, hotels, casinos, things that would be related to people getting back out again. Let's take a gander at a few here. This is why you want to cut your losses short. This one looked good. Opened up, traded positive, and closed as a bearish engulfing at the end of the day at this level. If you bought up here, this is one of the hardest things that I had to learn how to do, was when it closed here to close it out. Because what would be the probabilities of hanging on to this? Well, stochastic's flattening out. You've got a bearish engulfing signal, same level it topped out before. It could go up, but it also could come down to the T-line, or it could sell off. So remember, the whole point of getting into a position using the chart was telling us what our advantages were, what the probabilities were. And when they disappear, it's much better to take a small loss and move on to something where you can see where the probabilities are in your favor. So I'm pointing this out because even today, or in this day and time, if I buy something, I really have to gut up and say, oh, this isn't working, close it out. And you got that little emotional something or other whack in the head to say, oh man, what did I do wrong here? And it's not you did anything wrong. You just have to be under the assumption that not all trades are going to work. And when they don't work, close it right out. That is what will make somebody a good investor, is buying when it's time to be buying and selling when it's time to sell. That could be up 300%, or that could be the same day that you bought and the trade didn't work. Yeah, that's also, no, in this case, probably not. Now, had it opened here and started trading up, yeah, if it came back down through the open. Up here, I would have had to hold on to it to the end of the day to see where it was going to be, where it was going to close. Do you give a position an hour, 4 hours, whole day to work before pulling the plug? Yes. Remember what the whole criteria of candlestick analysis is. Where does it open and where does it close? Everything in between is just noise. So had this opened or closed right here, still in the upward trajectory. When it closed here, what did we have contending with our pattern, our fry pan bottom? We had a bearish engulfing signal. Right. That's not the best thing to have in your head. Give you a headache. So the next step is, people are always saying, well, if we see a signal setting up, can't we go ahead and buy? I always wait to see I'm reading what Richard, what do you mean even if it gaps down 75 points? Which one, Richard? Oh, like Zoom? All right, well, I've got Zoom on here, so let me get to it. I've got it down here in the biggies, so I'll remember to address it. So this is exactly why I would rather be a day late, but know that I've got the probabilities going in my favor, versus trying to jump the gun and then hope the market opens positive, hope the stock opens positive. I'd rather wait to see what it does and pay up for it versus jumping in and then not having it confirmed the next day. I'll jump to Zoom right now just to, would be doing it. If I was long and they gapped it down and they weren't moving it, I'd close it out so that I could take that money and go someplace else, and or reverse the position. Say, I've got a bearish best friend. Maybe it's time to be shorting this. So This is why you want to understand what should happen after a signal or a pattern. If you have an uptrend, you're up above the T line, what should happen? It should be in an uptrend. When they gap it down, you got to ask yourself, is this doing what it's supposed to? And that's the part of your discipline that you have to overcome, because what do we hate to do? I think we're in a good position, and then you have it gap down. What's our first inkling? Good, Richard. That's exactly what you were supposed to do, because that does three things for you. If I can remember the three things. First, it gets you out of the trade and puts the money back in your account. Secondly, it keeps you from sitting there all day long. And again, this is from the voice of experience many years ago. Sitting there thinking, well, they gapped it down. Maybe they'll bring it back up. Well, because we now know what investor sentiment does, if they're gapping down from a doji, it's not going to be a day where they're going to bring it back up. Now, you can tell that if they open it, you say, I'm ready to close it out, but oops, coming up, oops, coming up, coming up. We can see a belt hold. But if we see it open and they don't do anything, get your money back in your account. The important factor of that is you're out of a trade that you shouldn't be in, or it's telling you shouldn't be in. You got the money back in your account so you can go find something better. But most importantly, it frees up your mental analysis to say, all right, you're not in there. You're not trying to figure out what to do. You already got the money in your account. You just have to accept that it was a trade that didn't work. Now go find something else. Okay. Let's see. I have NIO as part of the ones. Yes, we're staying long on this one. So far, there's nothing to tell us that we should be selling. Now, lithium was a little bit of a conundrum. That's a meeting line. Opens here, closes here. Opens here, closes right basically where it opened or closed the day before. That's not a good sign. Which means if this doesn't open positive and trade positive, if it opens low, you probably want to close it out. It's probably coming back to test the T-line, but it's going to be a while before this tri-pan bottom rights itself and gets going again. So things that told you to get out. I had such high hopes for Blink. Some gap up, it's good move, broke out through this level. This could be wave 3, making big money. But what do you see? You see a bearish engulfing signal. And it's not a small bearish engulfing signal. It's a big bearish engulfing signal. What did that just tell you about your probabilities? Your probabilities have started to go against you. It could open higher and trade higher. It also could open and stay flat, or it could open and trade lower. 2 out of the 3 things that you can see happening after a bearish engulfing signal is not in your favor. So, yeah, everything's kind of bounced up a little bit after hours. So you can always watch, because if we wake up tomorrow, I don't know where the pre-market or the futures are right now, but if we wake up tomorrow and the Dow is going to be down another 140 points, that's going to be confirming the fact that that shooting star today at gapping up was the buying or selling on the news. Buying on the rumors, selling on the news. So everybody's been looking for relief in this market with the possibility of a vaccine. And now there's a good possibility there's a vaccine. That's what everybody was looking for. Let's take some profits. Things like VIPs. This is why I always have a stop set, especially up here in the overbought area. Because if it comes back down through the previous day's open in the overbought area, doesn't mean the uptrend is over, but it's a good probability that the strength or the magnitude of the uptrend is probably getting diminished. So think of the psychology of investor sentiment. You're in an uptrend, 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 everything's bullish, uptrend, bullish, everything's uptrend, uptrend. And then they do this. Now what do you have the bulls thinking about? That there's bears up here. So maybe I'm not going to be as aggressive a buyer anymore. And this is where, if this was a 10-minute chart on soybeans and I had this happen, even though it didn't close below the T line, I'd be taking profits. Because what's this telling me? Bullish, 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 bullish. Now the bears have stepped in. This is the area that we're looking for to start taking profits. Okay. SPWR. I close this one near the end of the day because there's a bearish left-right combo. Didn't close below the T-line. But remember what our most important investment factor is. The signals. Then everything else is confirmation. Whenever I see a left-right combo, I'm closing it right away because something is changing. And if you add everything together, the market was starting to sell off after gapping up. Some of these stocks were doing bearish engulfing signals. I would rather close them out because now they've gotten iffy. If the market stays strong, there's still going to be charts that look like this where your risk factor is much lower. Tim, yes. Just as I was saying, the signal is more important than where you are at the T-line. And now we've had some, that wasn't a sell signal, that was a sell signal. I'd wait to see what's happening to the T-line. But I'm way up here, and I'm doing a bearish left-right combo. That's a little bit different than a bearish engulfing signal, because what do we know about the bearish left-right combo? The reason we put that up in the top of our top-ranked signals and patterns list is the probabilities are extremely strong that a left-right combo is going to start a downtrend. So why fight the probabilities? If we held on to this, what would we be using as our next investment strategy? We would hope that it opens positive and trade positive versus trading flat or trading down. And when I'm sitting there saying, well, tomorrow I hope this opens positive, that tells me I should be out of that trade. Now this one is a little bit unnerving, but this was kind of one that we were expecting to do, the fry pan bottom J-hook pattern. Now it's not working. Now it hasn't really had a strong sell signal, a dark cloud type signal, but we're way down here. So this is one where, because you're starting to see selling and you're right here at the T-line level, now at least you've got an opportunity to look at it and say, if this opens lower tomorrow, close it out, because my J-hook pattern has now disappeared. If it opens positive and trades positive, yep, you stay in it, or you could be buying it. So anytime you see the market iffy and you start seeing signals that are iffy, shooting star, signal, bearish harami. Any relevancy to this happening right here? Like it happened right here. Doji, shooting star, shooting star. That just told us the probabilities of staying in this one as going against us. TPIC, I hope those of you that have gone through some of our stop loss sessions, when they saw it gap up, I mean, everything was gapping up. And then you saw it start selling off. Where was the place to put your stop? If it already was selling off, you put your stop at the previous day's close. Because logic says if they've gapped it up and started selling it off, if they come back down through the close of the previous day, the sellers are in control and it's going to create some sort of sell signal. Sava, we reiterated as a buy. Had this opened positive today. Well, obviously it didn't. Now, it's still not out of the picture, but I wouldn't be in it just so you see bullish confirmation from here. And we recommended going short on this one. Now, here's a perfect entry strategy. It opened positive. Wasn't going to pay attention. No need to pay attention. Nothing here. Then it started drifting. Where was the optimal place to go ahead and go short? It came back down through the previous day's close. What do you got going on? Another dark candle after a bearish best friend signal. That's when you can start shorting. So this one still has more potential downside. So the biggies, like Netflix, had a bearish best friend signal. Where do you think the next likely target's going to be? Probably down here. JD.com. If you didn't stop out, you should have closed this one out because not only did you have a bearish confirmation of your doji, but it closed below the T-line. So what's that tell us about the strength of this one? It disappeared. You're practically right back into this trading range. That's not the best place to have your money. So I was long some calls on this, and I took a loss today. And I'm thinking, oh, man. But the other side of that rationale of saying, oh, man, is I'd rather have the money back in my pocket to go find something good versus hoping that this is going to do something to turn around. And remember what the one of our little truisms about a candlestick signal. The bigger the signal, the more compelling there's been a change of investor sentiment. Amazon had the potential of doing a double doji, meaning had it opened positive and started trading positive, that would have been a good sign. And I'm taking a shot here to see which one. No, darn. There was one today that did do a doji, double doji. I'll see if oh, maybe it was this one. RV, LV. No. Well, Shazam. I'll have to find it. Tesla. Now you're back in the stage of, I would have closed this one out because what was that telling you about the trend? Yesterday you had a bearish Harami. The buying had stopped. Today you had a bearish engulfing signal. That was even, so here would have been a case that if this open, I was long, this opened positive, and then it came back down through the open, that's where I would have closed it out. Because what did you have then? A bearish Harami, and now looking like another signal setting up. Or was it Alex? Yes, that was it. Thank you. That was the one I was looking for. That's your double doji. And what does the doji tell you? Profit taking. Not selling, profit taking. Now, what's the difference between the two? Profit taking is selling to buyers and not really having a lot of force, just some selling. Whereas selling is seeing that dark candle where there's no buyers and they're selling it off. Was Baidu a double doji? Let's take a gander. Whoops. That's kind of a double doji, yes. Except that opened at 148 and closed here. So that was a failed double doji. But that would have been an immediate analysis that if this was a double doji, you wanted to see it open and trade positive. In this case, it gapped up and started trading negative. Now you got a hanging man, a doji, and kind of a bearish belt hold. That's trouble in River City. MYGN, that's kind of your double doji. Now, usually I put the double doji in the category that it opens and then the next doji is a little bit lower and then that day takes off. But here's another case where if I was buying on that day and it came back down to the open, I would have closed it out. Because what is the biggest, double word, what's the biggest expectation of the signals? Is the expectation of what should happen. It should be a strong day. It shouldn't be doing this. And if it's not doing a strong day, you close it out. Apple, a bearish left-right combo. And where did it occur? Well, you can see you're starting to get a pretty sideways movement in Apple. And NVIDIA, not a good day. And where did this all occur? Right about where it topped out before. Not many positive chats today. Not many. Oh, is that positive charts today? There you go. All right. I would rather, instead of trying to short something that hasn't confirmed, just because you close something out doesn't necessarily mean that it's going to be a strong, a good reversal. Except, was it Zoom? Zoom, with it gapping down, in this case, you could see it was setting up another sell signal or a strong sell signal, which is your bearish best friend. Whereas something like Plant, and even though it's doing a reversal signal, it may not be a strong short. I'd rather see a signal with strong confirmation. Now, if this opened down here and started trading down, yes, that would be a shooting star gap down. That's when you can start thinking about shorting. Okay, a lot of still positive charts. This, I knew this was not going to come up, but it's a lot of the oil stocks. There's a kicker signal on CNQ. I'm going to run through these real quick because there's tons of good oil charts. There's a kicker signal on PXD. Occidental. That's a good fry pan bottom breakout. Where do you think your next likely target is going to be? Up in this range. SU, another best friend gap up. CPE, another fry pan bottom breakout. And PCF. Is that the right chart? I don't know how I got that on here, but it must have been looking. Oh, that's the problem. I've typed something wrong. That's not PCF. Let's see if I do it like this. PCF. No, it's not coming up. Maybe that's it. Whoops. PBF, there you go. Oh, it is a B. I just can't read my own handwriting. So you got a lot of oils that are producing some good charts. Whoops. Well. That's not coming up either. Hello. And CVI, there's your kicker type breakout. Richard, yeah, that's a little bit of a conundrum there. I would have thought with Biden being brought in that your solars would have acted a lot better, and your oils would have been pretty flat, if not lower. But that's a perfect example of not relying on what you think. Because if I relied on what I think, I'd be wrong most of the time. I want to rely on what everybody else thinks that have already done their research and knowing what the fundamentals are or what the logic is. So it doesn't matter what I think. It's more a matter of what do I analyze everybody else thinking. Okay, now, see if I can read my handwriting here. I know a few people were still in play, which had a nice move today. So a lot of the, what do I say, social things, restaurants, hotels, that type of thing. All acted well today. Just if I finished my sentence, if I can remember how I started this sentence. There's a nice best friend, or a Doji Sandwich best friend breakout on this one. Somebody pointed this one out today in the chat room. So now you've got kind of your classic pattern setting up. Yeah, destination restaurants like your Red Robin's, and I ran out of ideas right there. I did that this afternoon too. DBI, that's a retailer. That's a trend kicker breakout. HYLN was off of this, been watching this one because of the McMuffin. That one can still be bought on positive trading tomorrow. Jace, yeah, I can't keep forgetting what the symbol is for Darden. That's it. Okay. Yeah, look for a 45 degree off of this one. Sientra, another one that was broken out further. It's still viable. There's your best friend. If this opens positive, it's telling you they're not coming back into this range. You could be buying this one. Let's see. We did Alex. There is Alex. This is a regional airline holdings. That one's probably going into a 45 degree. And this one was pointed out in the chat room today. Well, that ain't a fine howdy do. That just makes you, did I type that right? FSR. Yeah, it's not coming up for some reason. Cinemark, movies, up strong. Now you watch to see how they open some of these. AMC backed off, so this is your message. Now you wait for the profit taking to be over, then you can start buying this one. Devon Oil, yep, good trend kicker. Hotels were acting well. Trend kicker on PK, it's a Park Hotels. Wynn Resorts, big gap up. LIND is a hotel holding company. And we did Red Robin. ICPT, that's a nice fry pan bottom breakout to keep an eye on. Okay, now on the short side, Overstock has a Barry's best friend, but I see after hours it's trading up a couple dollars. So if you short this and it opens here, if it comes back down through the open of or the close of today, that's when you can start shorting it. LRN, one of the learning education softwares. Barry's best friend. This one can be shorted on weakness. So you had something like a chart like this on home. Notice what it did Friday. Did a kind of a hanging man or a hammer type signal. Tried to come back up. Now what's a very good indication that this is not working? When they take it and start trading it lower. That's when you can start shorting it. FLDM, kind of a kicker signal to the downside hammer. Now if this opens lower, you can start shorting it. Codex, another bearish best friend. This one can be shorted on weakness. Ray, that's exactly right. The assumption is, oh, everything's going to be better for the airlines, the hotels, the restaurants. That's what we would assume, except you got to see what everybody else assumes. So the thing that kind of forces me to watch what the chart is telling me is because I already know what I usually think is usually wrong, but that's what is the process for most investors. So what they think is the logical expectation is what usually makes some people buy at the top and sell at the bottom. Peloton, that might have a lot of wind taken out of the sails on this one. INO, another bearish best friend signal. Could be a lot more downside. Now, when I say it could be a lot more downside, when we see that doji gap down, that's a pretty strong signal. That's right. Or the other theological question is, if a man makes a statement and there's no females around, is he still wrong? INO reports soon, all right, and Vivo, a big bearish left-right combo. Not a strong chart anymore, probably something to go short. This one had been a good one on the way up, but notice, again, this kind of points out the exact logic of what we're looking for in a pattern. There's your classic pattern, fry pan bottom. Bullish Harami tells us the selling has stopped. Doji Sandwich says we have more upside. So what else do we need to watch is if we bought this here, what's it going to do right here? That's what everybody should be watching. Well, we saw they did a bearish Harami hanging man. What's that tell us about our breakout? Hasn't occurred. If it opens lower the next day, what's it tell us about our breakout? It's not going to occur. So they report tomorrow. All right. I was going to say, if this got weaker, now instead of a J-hook pattern, you've got a double top, probably coming back to a observable target. Let's see, is this Plantronics? The bigger the signal, the more compelling. So a lot of these are going to have a bounce tomorrow. You have to see how far they bounce up. A lot of them will come back up and test the T-line. And if they fail, you get ready to go short. So when you see that sell signal, like Stamp, look at the bearish kicker signal, lower, opened lower today. Where do you think the first target was everybody is watching for? See what happens when it gets down to the 200. And CWH, this is what you call observe the obvious. The obvious, the 50 is acting as a resistance level. Failed here, you got an evening star failure here, and a close below the T-line. When it opened lower, it was confirming your evening star signal and the fact that they weren't going to come back up above the T-line. Where was your next likely target? The 200-day moving average. Would you short the Qs with lower open tomorrow or wait until it closed below the T-line? Well, that's up to each individual. If it opens lower and you short, all you do is be a little bit more attentive to see what happens when it does get to the T-line. Now, the reason you don't have to hesitate if it opens lower and starts trading lower is because we know what to be looking for when it hits the T-line, to see whether it's going to go through or see whether it tries to bounce and come back up. So if this opened lower and I shorted it and it got to the T-line, what's our strategy at that point? Just flip to your 10-minute chart and see what the 10-minute chart is telling you. See whether they're going to support here. You could cover your short position. Or if there's nothing yet showing at the on the 10-minute chart that there's any buying yet, then anticipate that it's not going to hold at the T-line. Did I do Tupperware? Tupperware. Same kind of scenario. Had the a J-hook pattern. But that doji and then the failure today told you they weren't going through this level. They were probably sounded off. There's your bearish left-right combo. If you were long, and this is just something you want to put into your mental arsenal, if you're long and you see even though you're not in the overbought condition, you see a bearish left-right combo and a close below the T-line, you've got too many things going against you. First of all, the left-right combo in itself is just a major strike against the bulls. The fact that they're closing it back below the T-line is additional. You close it out. Yep, so many long red candles, and that would be surprising. That's why I'm saying you've got to watch, right? Take this as a warning, Will Robinson, that they were selling things off today when the market was up 1,200 points. That told you there was something that was underlying that was telling you people were starting to come out of trades. Or, again, you sell on the news. Okay, that's about all I got for tonight. Are there any general questions on candlesticks. Dr. Smith. I don't know who. Two indexes. Oops. Oh, okay. Will Robbins. That's right. Two indexes made a shooting star today, Doji or Dow and S&P, and a bearish left right combo on the NASDAQ. Should the index now trace at least to the T line, and then we decide or wait for the signal there? Is this understanding? You don't necessarily have to wait. If we wake up tomorrow and it's showing that the pre-market futures are telling you the Dow is going to open down 70 points and the NASDAQ is going to open down 20 points, you got to pretty much assume they are confirming the sell signals that we witnessed today. Again, that's the whole point of analyzing candlestick charts, knowing the signals, is what should happen after a reversal signal. We should see confirmation. Now, on the other hand, if we wake up tomorrow and the pre-market futures are showing the Dow or the NASDAQ going to go open up 120 points, well, that's not confirming this signal. Where are the scan formulas? All over the place. If you're scanning off of Metastock, they've got all our scans that you can buy the package from them, and every time you bring up a chart, it will show you all the buy signals and the sell signals. They're all over. We did all the formulas for TC2000, for NinjaTrader. I think TradeStation now has some of ours on there. So the best thing to do now, we've also done packages for Thinkorswim. However, here's a reality. To try to do your scans on the software or the charting services that might be at the trading brokerage firms, Schwab, E-Trade, Ameritrade, Thinkorswim, remember, they're not making their money by making effective charts or scanning charts. They're making their money by you buying and selling stock through them. So my reality check was we spent hours and hours and hours. We've developed the formulas for Thinkorswim, so you can buy those packages and they download automatically. But it's still a difficult software to try to do your scans. So I don't know what Metastock, it's not very expensive, and TC2000 is not very expensive. It is much more worthwhile for you to spend the other extra $40, $50, $60 a month to get your scans off of scanning software than it is to try to work with the labor-intensive, more difficult scanning processes that are on the trading platforms. Your price for whatever you spend on a scanning software program like TC2000 or Metastock, you're going to save tons of money time-wise using those versus trying to formulate your scans off a trading platform. So anyways, that's just me. That's my story, and I'm sticking to it. All right, Jim, let's go ahead and do the double line. Whoops. I was wondering why there was no more questions. The cat scrolled up on me. Cat, go away. Okay, we're going to have another cat auction here. And no sending back. Last time I FedExed her to somebody, they turned right around and FedExed her right back to me. How do they make money when they're not charging for trades any longer? John, one thing that you'll probably have discovered, especially in the options area, that the bid-ask spread has gotten bigger. So if you're trying to buy an option and where the bid-ask spread used to be $2 and then on the bid side and $2.20 on the ask side, now you might be seeing $2 on the bid side and $2.60 on the bid side. Now let's make it $2.40. So theoretically, the market for that option is probably somewhere around $2.20. Except you as an option trader, or not you in particular, option traders that mostly are less experienced about how to set their trades in, might think, okay, I like this, I'll pay up for $2.60. Well, they've actually can execute the trade at $2.30, or say, when I did the numbers wrong. You want to buy it, so you're paying $2.40, when they could probably actually buy it for $2.20. But that's what you put in, a market order or an order to buy it for $2.40. So even though there's no commissions, they're making their money on the trade. A lot of times, if you're going in to buy 1,000 shares of XYZ, they immediately sell that order to an intermediary who takes it and they execute the trade, get you your bid, but they've got a better price for it. They pay to get that trade. So don't worry, they're not making money by not charging commissions. Okay, let's see. Billy M. Long gapped up but immediately came down. So if you were looking at this chart, Marshall, just rhetorically, which way is this going? Pretty much it's not going anywhere, and it did a close below the T-line. If you can look at the chart, and this is what I have to do for myself, I have to take a step back and say, what's this chart telling me? It's telling me I shouldn't be long or short. Close out the position, move on to something else. Just getting into overbought conditions, so giving it one more day. It's still, yeah. Again, don't try to force what you see on a chart. Just take a look at that chart and say, there's nothing there. Let's move my money someplace else. What does this tell you? There's lots of indecision. Now this indecision is up, down, up, down. A doji does it in one day. Indecision. So right now it's not really telling you anything. BIIB, whoops, backed off way down here. That must have been a reaction. So if you were long, get out. That's not a chart to be in anymore. Buy on open. Roy, that one is not working. We did Tesla. Tesla, probably you don't want to be long or short now. You can see you're stuck sideways. There's no benefit one way or the other. And Goog, you can stay long. That's a double doji setup. That's what you wanted to see, is open positive. However, this one opened positive and came right back. That tells me if this opens lower, this all is Telling you they've run out of steam, close out the position. Duke Energy. It's going to be a slow uptrend. Very slow. Use the T-line as your stop. Agilent, another meeting line. This is your bearish belt hold in the overbought condition. If this opens lower tomorrow, close it out immediately. JP Morgan. Trend kicker breakout. That's unusual. Let's see. I guess all of them did that. Goldman Sachs, way up. Bank of America was up strong. I forget some of the other ones, but all the banks were going higher. We did HYLN. You can still be buying this one on positive trading tomorrow because of the McMuffin. IVR. This one you can get ready to buy. Just be careful of your volume on this price stock. But you can buy on positive trading. Did we not do this one? I thought we did. This one, you can get ready to buy if it opens positive. If you're long, I'd have a stop at today's low. It shouldn't come back in that direction. Halliburton, this one was acting pretty strong going into the close, but backed off. Look for a positive open and a 45-degree off of here. I'd use today's low as a stop also. Chef, scoop type pattern, look for a 45-degree. McDonald's, that's your bearish left-right combo. You could go short. Did they announce something? I can't imagine McDonald's selling off that hard. PLT, if in PLT, close out at end of day. If not, right time to short. If in PLT, yes, if you didn't stop out somewhere up here or here, if it opens lower tomorrow, definitely get out of that position. Remember, the bigger the signal, the more compelling there's been a change of investor sentiment. Lows, you can go short. Zynga, there's your abandoned baby. Very strong reversal. Stay short. And Harmony, that's unusual. Oh, did gold? I think gold did sell off today. It did. Up a little bit after hours, but it had a hard selling day. Penn, another bearish belt hold. Get ready to short this one on weakness. Yes, okay, you're ahead of me. And CrowdStrike, another bearish kicker signal. That's a good one to go short. DSKE, there's your bearish left-right combo. Is this a breakout pattern? No, this is a breakdown pattern. You got a bearish left-right combo right here. It's not breaking out. If this opens lower and I was long, I'd close it out. The worst case scenario is you can always buy it back up above this level. ALT, short. SND, nothing. That's just a nothing chart. And PEIX, if you're short, you can stay short. if you're thinking of going short, you can short on weakness. Oh boy, CB. Yeah, that's going to take a while. I'll take a look at the first couple. So this is energy was up. Finance was up. That one was up, but you can see it was selling off going into the close. And that one was up, but came back into the trend. So your financials and your oils are the strong ones. Daku, another one you could go short on weakness. Cardiff didn't do much today. Oops, it did better than I thought. It was down earlier. You can still get ready to buy this because look at the added evidence you have. They're supporting on the T-line. You can buy this one on positive trading. And IMGN, this one I'd be less apt to buy because of the doji up here. It's kind of a higher risk. You could buy it on positive trading, but if it opened positive and started trading positive, you immediately put your stop just below the doji because logic says if it trades up and comes back down through there, it's creating a sell signal in the overbought area. Occidental was a good oil chart, good breakout. And Enron, Enron Oil and Gas, that's a good good kicker signal. I have a buddy that was a VP of Enron Oil and Gas, and they made money because right now he has a warehouse in one of the most expensive areas of Houston and has 500 classic cars in it. Do you have a personal rule that limits how many positions you have on at the same time from stocks in the same sector? I try to at least have the diversity be somewhat. So if I've got 10 positions on, and I think the oil stocks and the finance stocks are strong, I might have 2 oils, 3 finance stocks, and then the other 5 just other strong stocks. So I'm usually a little bit heavier weighted on sectors that I can see there's a lot of strength in that sector. So if my position numbering is 10, I might have about half in the strong sectors. The spreads, and they sell the trade volume to someone else. Yes. There's some links. Thank you, Jim. Whoops. SRS, that's a toughie. If you were going to do anything with it, I probably wouldn't be going long, but I'd be going short, especially if it opens lower and starts trading lower. As you can see, it's broken this support level with a gap down. And Rite Aid, you stay long on this. Use the T-line as your stop. Oh, buy on positive trading, you can. Just don't let it close back below the 50. This one I would be out of, Lee. There's nothing there. You could possibly be going short. I'm expecting this was a reaction to somebody else coming up with a vaccine before them. So people are just bailing out of it. So it's not a good place to be long, obviously. AMD, Don, there's nothing here. It's needed to open positive and trade positive today. You can still see you're stuck in this downtrend. It wouldn't be something I'd want to trade. AMGN, that one is kind of your bearish belt hold. Another one that if you were long, it has to open positive and trade positive. If it opens lower, close it out. It's turned into a bad chart. MMI, big shooting star. So observe the obvious. If it opens lower, you close it out immediately. If it opens positive, it needs to continue to trade positive. If it opens positive, you put your safety stop at today's open. That if it opened positive, you don't want to see it come back down through that level. FDA, on Alzheimer's. I thought, does Sava have any connection with them? Because I would have thought if that were the case, I thought Sava was working on an Alzheimer medicine. Twilio, I'd be more apt to go short on this one on positive or on lower trading tomorrow. All right. REG. That's a good kicker signal. You could go long. Oh, McDonald's was earnings. That's surprising. I don't think I've pulled into a McDonald's any time of day where you don't have to wait in a good size line to put the order in, which is the drive-through. MDLA, Doji Sandwich coming up through the 50. You could be buying this one. McBear. They're creating their own plant burgers. All right. Yeah, so that's one thing you always have to keep in mind, that no matter what product somebody has and how good it might be, what's the existing environment? Are there competitors coming in? So that one probably is a good one to get ready to go short. Bearish left-right combo right here at the moving averages. Qs, bearish left-right combo. Boeing, get ready for a scoop type pattern. ACB. Started to sell off today. You got to be careful on this one. They move around quite a bit. NJR. New Jersey Resources. Whoops, trend kicker up through the 200. Stay long on this one. We did Beyond Meat. Enron. Enron, you were scared once. Does your EOG friend have 500 plastic something? No, these are all all classic cars. And I think he's got 500 of them in just warehouses in Houston. And I think he's got another 125 up in the country someplace. At what time during the day do you determine which sectors are strong? That's probably a natural evolution that if you're doing a quick scan and you see that Carnival is up strong and Royal Caribbean is up strong, you can have a pretty good idea that that sector is up strong. So it's not so much that you have to scan for them, and especially this is where being in the chat room helps identify which sectors are strong. When somebody says, oh, look at Southwest or look at Alaska Airlines up big. At least when you look at the airline, and you quickly look at a couple more and see they're all trading strong, you already know that sector is a strong sector. Tour, big breakout. Salesforce. That one is getting a little bit iffy. Look where it's resisting. So if this opens lower tomorrow and you're long, close it out because that tells you they didn't get through that resistance level. QCOM had a big day a couple of days ago, but now you've got a bearish left-right combo. That would tell me if this opens lower tomorrow, close out the position. It's gone against you. Blink, we did. Blink did a big bearish engulfing. Get ready. Yeah, I closed this one out today. Same scenario. Look where the resistance level was, and look what happened at that resistance level. Candlestick sell signal. That's true. I was going to mention that, Don, as my final closing tonight, that I knew you would all be happy that the Steelers are now 8-0 for the season. Don, they do that every weekend. They take it right down to the last play of the game to see whether they're going to win or not. I think it was the Baltimore game last week that they were ahead. Can't remember what the score was, but Baltimore kicked a 49-yard field goal on the final play of the game to go ahead, but they missed it. So they've been nail biters. BNTX, that's your message. Now wait to see when the profit taking is over. Yeah, I don't tell Nurse Cratchit. She's still in Texas right now, so I don't mention that I go to McDonald's occasionally. And announcing an additional data for the phase 2 study of how do they come up with these names? Somlaflamlin. All right. Thank you for that. I would have thought they would have been doing better. How come I keep doing this? Costco, this one you should have closed out. The bigger the signal. Ford, that one you can get ready to buy. That's a nice J-hook pattern setup. No, not Cisco. Enron originated from, I think, Houston Natural Gas. Richard, yeah. But you know what will happen 3 weeks from now, Richard, nobody will even remember. It will just be a stat. Barely got by those powerful Cowboys. That makes me laugh. AMGN, again, I'd get rid of this on the lower open tomorrow because of the failure. MMI, did we not do this one? Yes, we've done this one. Did I scroll backwards or something? Yeah, I keep hitting the J key because that's what you have to use on the TC 2000. This one, if you're long, has to open positive tomorrow. And plug, you can stay long. That's a good chart. Space, boy. You can be buying it. It's just not anything wild and exciting just yet. Okay. It's kind of it's not quite a belt hold. Close to be a belt hold. It's kind of halfway in between being a belt hold and a message. But you can see where it failed. That's the significant factor. It failed here at the 50. Okay. That is kind of a red flag right there that they gapped up and then did a shooting star type day. Get ready to take profits and get ready to go short. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.